the best of Money Matters.
Market View on Money FM 89.3.
That's right, you're tuning in to Money FM 89.3. Time now for Market View with me, Chua Tian Tian, where we take you through how the Singapore stock market closed for the day, the biggest movers, sectors, and of course the companies to watch. But as always, a quick recap of some key movements. Singapore shares fell today, tracking that downbeat mood seen in global markets. So if you look at the Straits Times Index, it was down 0.42% at 3,905 points at about 2:32 p.m. Singapore time, with a value turnover of some 805 million Sing dollars seen in the broader market. Now let's take you through how the Singapore stock market ended the day. The STI are down 0.27% at the close at 3,911 points. In terms of value turnover, we are looking at 1.25 billion Sing dollars. Now gainers trailed losers 160 versus 359. Top advances for today we've got for you GMH USD, Penguin International and SGX. And top decliners we've got here DBS, Jardine Cycle and Carriage, as well as iFast. Now, in terms of counters to watch, we have Singapore Airlines. Now, shares of Singapore Airlines dived this morning after an Air India plane bound for London crashed yesterday. So SIA holds a 25.1% stake in the Indian flag carrier. Now, elsewhere from movements in global equities and oil prices amid heightened geopolitical tensions in the Middle East, to AMD unveiling a new AI server for 2026 that aims to challenge Nvidia's flagship offerings. We've got more international and corporate headlines in focus. Also on deck, we'll talk more about Pop Mart and Labubu, but in just a bit. So for more market moves and views, joining me on the line on a Friday is Benjamin Goh, Head of Research and Investor Education at CRZ. Welcome back, Ben.
Hi, Dan. How's it going?
Good. And Ben, let's start with global movements this time around. I mean, global stock markets dived, oil prices up today because Israel conducted a military strike on Iran, rattling investors, sparking this shift towards safe havens like your gold and Swiss franc. But what are the key movements to watch where Asia is concerned?
Well, as you mentioned just now, the STI index kind of got off a little bit light. If you look at all other Asian markets, they were down about 1% across the board. European markets have been open for an hour, slightly more than an hour. Again, pretty much a mixed bag. London is down about 0.5%, but Germany is down a staggering 1.5%. Not sure why. All other EU markets are faring somewhere in between those two. If you look at US stock futures, similarly down at least 1%. That's why, we expect the US stock market to open low this evening. So net overall, a very normal knee-jerk reaction to bad news. So nothing too crazy. Whether or not this is going to be the start of a prolonged period of higher geopolitical risks, thereby weighing down market sentiment, I think it really depends on what happens on the battlefield. So if you look at what's been happening, right? So Iran has a very limited capacity to strike back hard at Israel. So its proxies, like Hezbollah and Hamas, have largely been neutralized by Israel already. And of course, if you look at the news feed, indicates that Iran is responding with mass drone strikes. But this on its own is not going to really deter Israel. I think the best scenario that we can all hope for is that the politicians on both sides can, claim victory, save face at some point next week, and then pull back after the initial phase of fighting. That will be a huge win for financial markets everywhere.
But for now, though, if we look at crude oil, it jumped as much as 14% at one point. Brent futures up $5.43 at about 74 USD 79 cents per barrel at around 1:41 p.m. Singapore time. What are the levels then to watch for oil in the near term?
Well, the oil price have actually come off a little bit. So intraday, the Brent futures for August delivery was actually up to more than $78 per barrel at one point earlier today. So it's a case of good news, bad news. I think the good news is that the war is confined to Israel and Iran. Current reports indicate that Israel has really concentrated strikes on Iran's nuclear enrichment facilities and military leadership. There were no Iranian oil production facilities that were hit. So that's puts a kind of a cap to how high oil prices can rise. And of course, the other thing is that OPEC has got ample spare capacity, and they can intervene if oil prices get out of hand. But of course, between us girls, we need to also acknowledge that OPEC members, or rather some OPEC members, may actually welcome tighter supply and higher oil prices, at least temporarily. So that's the good news. The bad news is, of course, it adds a new layer of uncertainty alongside Trump's tariff war as well as high inflation. And of course, any kind of prolonged conflict will lead to higher oil prices, which would then, of course, inflame global inflation. So that's all bad news. If you are talking about levels, I think the first intermediate price level here would be the intraday's high of $78. Then moving forward, the next level will be $81. That was reached on 13 January this year, and after that will be $87. That was reached July 2024. Then, of course, there'll be $90 and $100, but that will be quite extreme. So hopefully we don't get to that phase if the fighting dies down pretty quickly.
Okay. Now, going back to the Singapore stock market as usual, Ben, how did the STI fare today? Any surprises when it comes down to the biggest movers and the sectors that they lie in, or the counters to watch, say, OCBC, because I understand its mobile app was hit by an outage earlier, I suppose?
Yeah, so very much a mixed bag. So if you look at Citrum and SATS, both down almost 3% and 2% respectively. But alternatively, Keppel was up 1.5%, SGX was up 1%. The local banks were down about 0.5%, so not too shabby. SIA is, of course, down because of what happened to Air India.
Yeah.
So if you zoom out, right, there doesn't seem to be any kind of dominant narrative driving the market movements today. I think the market is trying to find its feet given the onslaught of news. If you look at OCBC, well, it was down about 0.5%, but that's not significantly more than its competitors, DBS and UOB. So what this suggests is that the market does not really see the mobile app outage as a structural long-term problem. So, I mean, they may get slapped by a fine, slapped with a fine by MES, but, they probably get it fixed. I think looking forward, we are probably going to get more clarity next week. If especially if the talks between the US and Iran takes place as scheduled on Sunday, but all bets are off given what's been happening this morning.
Okay, and Ben, you talked about Singapore Airlines. I do want to take some time with the counter because shares of SIA dived this morning after an Air India plane bound for London crashed yesterday. And as we know, SIA holds a 25.1% stake in the Indian flag carrier as a result of the merger of Vistara. How would you read into investors' reactions today? And broadly speaking, what are the implications of the incident on aviation-related counters in and out of Singapore, say in the case of Boeing as well?
Well, I would say that the crash was really unexpected because the plane model that is, in the crash is actually the Boeing 787-8 Dreamliner, right? So, that model has had a perfect safety record until now. If you look at the news feed, again, the current info suggests that the most likely culprit is either one, a bird strike as the aircraft was taking off, and this is actually quite common. And the second one would be a catastrophic technical failure of the plane itself. So now, naturally, if the plane is at fault, if there was a hardware failure, then of course this would be a Boeing problem, right? But too early to tell. Well, not to make light of the tragedy, air crashes are actually very, very rare, but they do occur because there are actually thousands of flights each year. So if you look at the probability, right, there will be one or two each year given the number of flights. I think if we come back to SIA or any other airline stock that has got a Dreamliner plane, I don't think this is going to have a material impact, and it could actually be a buying opportunity if you're trying to get into SIA. I think the more dominant risk factor impacting airline stocks will be higher oil prices given the Middle East situation. So that will be one. And the second thing will be any kind of global slowdown from the current tariff war. I think those will be the more important risk factors I'll be looking at.
Okay, now if you're just tuning in, we're in conversation with Benjamin Goh, Head of Research and Investor Education at SIAS. Well, across the region, or in fact further away, Ben, Advanced Micro Devices AMD CEO Lisa Su unveiled a new AI server for 2026 at a developer conference in San Jose. Talk about sibling cousin rivalry. The server aims to challenge Jensen Huang's Nvidia's flagship offerings. And that's particularly so because OpenAI CEO Sam Altman held the stage with Lisa Su and said the ChatGPT creator would adopt AMD's latest chips. How do you read into the news in totality then?
Well, I think it's a fantastic development by AMD. So if you think about AI chip space, right, Nvidia is the current market leader, and its latest Blackwell chips are doing very, very well. So extremely capable, best in class, best in the market leader, but obviously extremely expensive as well. So AMD's opportunity here is to provide better value than Nvidia. That is to say that the AMD can provide good but not the best AI chip solutions, but at a far lower price point. And if you think about it, historically speaking, AMD has been at this exact spot before. So before Nvidia, AMD was David versus Intel's Goliath. And, if we recall, AMD actually won the battle. Intel is, of course, a runner-up compared to AMD right now. So I think it will take years and, some luck, but I think AMD and Lisa Su, is the right team to take Nvidia on. And of course, not to say that it's probably going to be quite awkward at Chinese New Year gatherings between Lisa Su and Jensen Huang. I mean, they are related. I'm not sure how close they are, but I guess it's going to be quite interesting to see how this pans out. But I wouldn't mind putting some money on AMD in this fight.
Okay, now finally, Ben, let's talk about toys. Because earlier I caught my parents trying to change clothes for their Labubu dolls, the ones that you hang on the backs. And I'm bringing in Labubu for a reason, because Wall Street analysts, they're rushing to raise price targets on Pop Mart International Group following the success of its Labubu dolls. So at least 5 brokerages, including Deutsche Bank AG and Morgan Stanley, they've lifted projections on the Hong Kong-listed stock this week. Citigroup in particular hiked its price target by 90% to a street high of 308 Hong Kong dollars a piece, citing growing influence of the company's IP globally. What's your take on Pop Mart then?
Okay, I mean, to be perfectly honest and straight off the bat, I don't get Labubu dolls. I mean, they're not terribly cute. Could be a bit creepy with the fangs and all that. Okay, but that aside, so let's zoom out and look at this, right? So, do you remember Cabbage Patch dolls and Tamagotchi pets?
Well, Tamagotchi, it's a long time. It was Neopets in my time.
Yes, so similar, right? So you've got all these kind of retail toys, super popular at one point and then flamed out. Or alternatively, you can look at Angry Birds and Minecraft. So they went on to become cultural phenomenon with movies. They started as video games, then they got movies, they got toys, so on and so forth. So I think at some point, Labubu dolls, they need to make the leap to animation, movies, video games, other kind of content to propel the brand further. So right now, it's just the toys, right? The physical toys. So if they stick with that and it doesn't grow, then, Labubu dolls and Pop Mart might be at risk of becoming a very niche product market with very limited broad market appeal. If you look at the stock price itself, Pop Mart's current stock price is about 15x what it was at the start of 2024. But let's get real. We're not talking about Nvidia, BYD, or Pfizer. Labubu toy dolls, right, do not fundamentally change the world we live in. I mean, it changes the bedroom, right? Especially if you turn off the light. It's a bit creepy, but it's not going to change how we live, right? So I would say that Pop Mart, probably fun and profitable to invest in, for a stock, but could be highly speculative, given the nature of the product. So, consumer cyclicals, and therefore, the consumer taste, is very fleeting. So they might, after a couple of years or, a couple of months, the world might move on to the next best thing. So, not for me, but perhaps for some of you out there who are, maybe trying to change the clothes on your dolls, you might want to get in when it's still hot.
So basically, it really depends on the long-term positioning of the company. whether it is for content and IP or just solely in terms of consumables. That's all.
Yeah, I think I think the trigger is that if you hear news like Alibaba Pictures or Tencent is gonna, have a new video game or movie starring Labubu dolls, I think that will be kind of like the next catalyst to take the stock price higher.
I see. Thanks so much for the insights, Ben. That was Benjamin Goh, Head of Research and Investor Education at SIAS. Thank you so much for joining us on Money FM 89.3.
Before acting on the information on Money FM, please consider if it's suitable for your own investment objectives, financial situation, and risk tolerance.